Hey everyone, Steve here from theturtlefollower.com with your stock market outlook video for Sunday, November 15th, 2015. Sorry I'm getting this out late, but we had a busy weekend, so late is better than never. So here we go, real quick. Just want to offer, obviously, prayers and thoughts with everyone over in Paris, or that whole debacle that's going on over there. It's just amazing, when you look back and see that kind of hatred. It kind of shocks you a little bit. But again, thoughts, prayers with everyone involved in that whole situation. As far as the markets go, I don't know if that news came out. I left early on Friday. I didn't really watch the markets. First time I'm looking at them since Friday morning. So I don't know if that news came out earlier on Friday and was part of the reason that the market sold off. I don't think so. And with that said, what I'm looking at here is, you can see we have a bunch of lines on our chart. But what I'm looking at ultimately is, on this weekly chart, that we are coming into this huge resistance area. And sure enough, we came in, we hit it, and we sold off. And we sold off pretty hard this week. So exactly what I didn't think was going to happen happened. We did pull back further than I thought. I really thought we would hold this 50 area here on the S&P futures. That didn't happen, and then we just cut through all these other resistance areas from different swing low points from earlier in the year. So now here we are, we're testing the last possible support area. All right, this 2012, you could see that acted as resistance on the spike we had in the middle of September. And it also acted as some resistance here in the end of October, and then some support at the end of October. So middle of October, end of October, touches. And now here we are right now back to that level. So what I'm looking at here is the 50-day moving average, thinking that maybe this is going to support as well. All right, so I'm looking for a bounce earlier in the week to really signify this area as some critical buyers coming in, some critical support. Unfortunately, with the news out of Paris, I don't know how the market's going to react come Monday morning. So this kind of stock market outlook video has this big caveat on it. We could open down 40, 50 points. I don't know what happens here. With this terrorist attack. So going back to like 9/11, it was a little bit different then. Where it was a lot closer to home type of thing, and when the market opened down almost 700 points. So here we are. I don't think we see anything like that, but I would not be surprised to see us gap lower, maybe 20, 30 points, and then trade lower throughout the day. I don't know. But with that aside, if that didn't happen, and we didn't have to deal with that information, what I would be looking at here is for the daily chart to come in and test this area here between 20 or basically 2000 and 2010, and that would really put a test on the 50-day moving average, and maybe that would support us for a move back to the highs. But at this point, we've retraced just about 50% of that move. If we put on a quick retracement of the move from here to here, a little less. All right, so 50% retracement is this 1985 area, which coincides almost perfectly with the low that we had here on 10/15. So with that said, I think the market has shown that we have a significant resistance level, and we've known that. We have a significant resistance level here between 2130 and basically 2100. That area has been tested once again on this move higher, sold into, and sure enough, look at Thursday and Friday's move. We had some big down days on those days, and taking out this small level here around 2062, and sure enough, trading all the way down to 2110. So, or I'm sorry, 2010. So as I said, I think critical point of emphasis is what happens between Monday and Tuesday. If we can hold above the 50-day moving average and maybe start putting in a bit of a swing low in the effect where we may have a move below the 50-day moving average and close back above it, that would be a good indication that maybe this brief sell-off is over, and then we can continue higher. But for right now, this looks like it's just falling out of bed and looks almost similar to what it did back here. So I don't know if that happens. I hope not. To the fact of where we see 3 big down days, we've seen 2 right now. So any further selling, don't forget, we're probably getting into the oversold condition, and maybe looking for a bounce, but that bounce may not be the bounce that really holds us up. It may just be a spot for short traders to reload to the downside. So again, with everything that happened in Paris and everything like that, it's kind of hard to pinpoint what I think is going to happen. My best guess is we come down, we test the 50-day, that holds us for a couple days, and then we really have to see how it plays out the rest of the week before we have any real information. But as I said, the next few days are pretty critical as far as if this bear move is going to hold or if the bulls are going to regain some control, because right now the bears are definitely in control of this market. All right, here we are on the Nasdaq. Similar situation. We came right up to that resistance level. We broke above it, and sure enough, sold right off. Again, selling off hard on Thursday and Friday. So here we are testing 448, 4486. All right, again, 50-day moving average down here. What is it? 4,420 about on the futures. So again, I see a little bit more room to the downside, but I'm hoping for a move below the 50-day and then a close back above it, signaling a swing low that maybe we could trade against to the long side. So the portfolio has been, putting on short trades. We've been profiting from some short trades over the last week. I'll go over that with members in their premium video. But again, if it's something that you're not comfortable trading to the short side, that's fine. Just understand that to the long side right now is pretty difficult. So we'll see how that plays out. But again, I just don't like this accelerated look in selling on the daily chart between Thursday and Friday. And especially with the news out there, who knows how this reacts and how this opens. Similar situation here on the Dow. Dow didn't even get up to that level of resistance up here around that 18,320. It didn't even really get there. You could see potentially now this could be a lower high in the Dow, where this could be a short trade to the downside, maybe signaling something along a channel that now points from the weekly perspective, points downward instead of upward. All right. And again, if we were going to hold, I really thought we would have held 17,256, which was the lows from back in here in April, the lows again from July, lows again from here in August, and then you could see it kind of marked the high right in here. So I would have thought we would have seen some kind of buying happen right at that level. The fact that we didn't is concerning, and the fact again is we have some room to the 50-day moving average. We have some room to the trend line, so maybe we start pulling back and bounce and then get going back up to this high. But again, right now I would say bears are in control until the bulls can show that we can hold the level and start moving higher. And the last one, Russell futures. All right, again, came right into that 1190 level and sold off. So here we are in the Russell, in this huge range right through here, stuck underneath the 200-day moving average. And on the daily chart, you can see that we've held this level so far right around 1135, but we are below the 50-day moving average, and again, accelerating to the downside. So I wouldn't put too much faith in this 1135 area. I would put more emphasis down here all the way at 1075. So maybe this is one that reverses all the way back to the lows and we just start building a much bigger consolidation or a much bigger range on the weekly chart to the effect of something along these lines. All right, where we trade between 1200 and 1100, say, and then ultimately that sets us up for a move to the downside. All right, we'll see how that plays out. That's obviously over a couple more weeks than what I'm talking about for next week. I would just be cautious. Again, if you're not willing to trade to the short side, I would just be predominantly cash. I think direction bias, I would say, is probably lower, especially with the uncertainty from how the markets react to Paris. But as I said, I would say, if I had to put money on some direction, I would say, short is probably better than long at this point. So we'll see how it plays out. We'll go from there. And any other questions, let me know. And we'll revisit this during the week if needed. So again, have a great rest of the weekend. Thanks for tuning in, and we'll catch you during the week. Take care.